thank you everybody for joining today. It's me, Hunter, the community manager over here at Option Labs slash Arbitrum. Usually I'm on a regular account. Today I'm on the Arbitrum account. Technical reasons, don't need to get into that. But we are joined today by Yubo, the founder of Parallel Finance. Also, I guess I just said it all in one sentence there, but Yubo, the founder of Parallel Finance, will be kind of diving into their protocol and pretty much going into the details of what their project is and what we can expect to see coming to Arbitrum soon. Yubo, how's everything going?
Yeah, it's going good. Such a crazy day, with all of the news around FTX, Alameda. But things are good on our side. How are you doing?
Likewise, yeah. I mean, definitely an understatement to say it's a crazy day. But happy to be here with you today to go over fantastic protocol that I think a lot of people in the audience are going to be very excited for to see launch on Arbitrum soon.
Yeah, for sure.
But with
I'm
that,
super excited about it as well.
awesome. So I think in that case, maybe what makes the most sense is if you want, you can kind of give us a high level introduction of what Parallel is, and kind of just maybe just what led you to founding it, really.
Yeah, for sure. So I think some people know, heard about parallel finance and then heard about my background. So maybe a little bit quick introduction. So I started parallel finance 2021, and then the new company that we are presenting today is Paris Space, and then it's also part of parallel finance. We we are launching applications beyond basically in the Ethereum ecosystem starting earlier this year. And then pretty excited to present a new type of lending protocol. And then we wanted to really solve a lot of the deep problems in the lending protocol space, and especially for less liquid asset. And then over the last few months, we have been building, and then I think in about roughly couple in the next couple weeks, we're ready to go, and then we'll deploy our Arbitrum as well, and then that'll be a super exciting time.
Just to make sure, I think we have a clear differentiation. So, what are the differences, or maybe some of them are the same, between Parallel X, Parallel Finance, and Paraspace?
Yeah, so sorry, the name is a little confusing. So Parallel Finance is a DeFi one-stop shop for the Polkadot ecosystem, and then perhaps also other multi-chain ecosystem. We have the largest amount of TVLs for both lending, trading, crowd loan, and then things like that. We also build solutions for Parachain, which is sort of a layer two for Polkadot, to easily launch their chain through our solution. And in the future, we're gonna sort of make better solutions on top so people can rent it instead of do the auction. And then Paraspace is the new protocol that will be on Ethereum. It started by myself and then some of our team member. We have additional fundings from a little bit different type of investor, but we also reserve a portion of the new token, potential new tokens in the future, to the existing token holders. And then so Pairspace is this lending protocol for non-fungible and fungible assets that will be deployed on all EVM chains. Parallel X is a sort of forget about it for now. We originally planned to use Parallel X as an internal name, but then we at this moment of time we wanted to make a little bit distinction between two protocols to not confuse people too much. So just Parallel and Pairspace.
Okay. Okay. That totally makes sense. In that case, then maybe we can get into, because Paraspace is more for the EVM based, in this case, Arbitrum.
Yep.
Arbitrum specifically, non fungible and fungible tokens.
Mhm.
How does this differentiate itself from like any existing lending protocols?
Yeah, so there are generally two big distinctions. So one of them is that we have a cross lending, cross margin capability, and then we support a lot wider range of collateral assets. So typically, our protocol supports the typical sort of profile pics, the blue chip NFTs. We also support ERC20. At the same time, we also support Uniswap V3 LPs, which is also another type of NFTs. So the goal here is to try to allow anything to be borrowed against anything, right? That's kind of the long-term ideas and vision. And then we believe that the cross margin model is actually very beneficial for the user, especially for the people who hold multiple type of assets. Um, so for the people who don't know much about cross margin models, it's essentially a liquidation model, right? So when you borrow against your collateral, you can put multiple assets into one bucket, and then you borrow some, money. If one of the asset goes down in terms of value, but then the other type of collateral goes up, you may not get liquidated, right? In comparison, there is the isolation model, where you use one collateral and then you borrow some money. So, for example, Maker, right? You use some specific asset and you mint some DAI. So if the asset goes down, then you will be auctioned off. The collateral will be auctioned off. So you cannot do the inter-collection hedging or inter-asset hedging. Um, so that would be the big distinction. And then go back to the question on the what are some other differentiation. The second one is that we created a new ways of risk customization. Since we have so many different type of asset on the platform, we actually allow the user to predefine the lenders to predefine a range of type of asset that can that they wanted to underwrite. Right, the upper risk tiers, how much risk that I'm willing to take. What is the maximum amount of risk I wanted to take? What is the lowest amount of risk that the lender wanted to take, so that their capital can be borrowed against. So it's both it both have it's so this model both provides a mechanism to provide higher efficiency, but at the same time control customize the risk for the lender. I think number three, perhaps we also have a very secret apps built on top, which is a buy now pay later, especially for NFTs, and then people can pay essentially zero down payments on the system through the new way that we design.
Ooh, if I may, maybe we can dive a little bit
Mhm.
deeper into the, especially into that last one. Actually,
Sure.
like how does that work? How
Sure.
does one like do on chain away? Is what it sounds like.
Yeah. So how to do.
Sorry, just I called it on chain layaway as a joke, but like, yeah, how does one do the whole like buy now and pay later kind of thing you mentioned?
Oh yeah, yeah.
How does that
So
work?
absolutely. So basically, yeah, yeah. So the way that it works is that um say for example you have a bunch of let's say you have a bunch of board apes, and then you want to buy a CryptoPunk, and but you don't have money. So the way it works is that you can supply a bunch of board apes you have, or some um, say some other assets, can be stable coins or whatever, and then we're going to create an over collateralized credit for you, and then it's going to count in the units of dollar or ETH. Um, and then you use that credit through the buy now pay later platform to purchase any NFTs you want into one transaction. Say you want to buy three punks, then you put them all together. You can see that, oh, supposedly you should pay, let's say, 100 ETH, but because you already have, let's say, 200 ETH worth of credit, then you can just totally buy it without paying additional money. One more layer on top of that, we also create future credit for user. So if the asset that you are trying to purchase can be used as a collateral. For example, CryptoPunk, we can give you, let's say, 30% of the floor value. Then we also counted the future credits for you. So then you have perhaps 100 plus 30, then you have 130 total credits. Then you can purchase up to this amount on our system. So it's a super capital efficient way for especially NFT traders and flippers to play around the system.
Very interesting, and I think actually, if I may have you expand on another thing there, you mentioned the ability to kind of do this with also NFTs, and you mentioned crypto, for example. Is like, to have this happen for NFTs, like does there need to already be an established market for these NFTs? Like, can it just be like like an NFT, let's say a project that launched like tomorrow, for example,
Mhm.
or again, like, does there need to be the kind of deep liquidity for said NFT?
Yeah, so for sure, like at the beginning, we support only the top traded NFT projects going forward. Since we have this risk control model, we are able to list smaller capped NFT projects as well. It's just that the lender have to define how much risk are they comfortable underwriting, right? If the lenders are comfortable underwriting lower tier NFTs, then yes, you will get instant liquidity as well. But obviously, there are potential losses if the liquidation didn't happen accordingly.
Gotcha. Yeah, no, because I just asked that because I know that I, I know that there are different kind of ways to kind of to take advantage, I guess, of NFTs in this way, especially because they're non fungible. It's a lot different than just having a liquidity pool, kind of sitting there and waiting. Um, but very interesting to hear y'all's approach on that.
Mm-hmm. Yes,
So if I
yes. So uh,
oh no,
yeah,
go
a
for
lot
it.
of
Sorry,
thinking.
go for it.
Yeah, no, no, no. I'm just saying that I agree with it. Yep.
I can definitely follow that up then with why Arbitrum? And actually, okay, I'll leave it there. Why launching an Arbitrum? I know you mentioned this is supposed to be the EVM based one, Paris based. But yeah, like, what are your thoughts there on why layer two?
Yeah. So first of all, we wanted to launch on as many EVM chain as possible. Arbitrum specifically, I really like the fact that we have a super fast and cheap environment where users do a lot of trades and then do a lot of transactions. As people know, that Arbitrum has actually large numbers of on-chain activities, especially in the layer two space. Another thing is that I noticed that there are a lot of activities recently with the launch of OpenSea on Arbitrum. More and more NFTs been traded on platforms, but also at the same time there are other type of financial NFTs. For example, Uniswap V3. There's the GLP tokens, and I think that those are great assets to support. But there haven't been really a platform to unlock those capability. So I think that there is probably a good I think a bunch of problems to solve, but we're just trying to provide really good solutions out there. But in the long term, I'm very bullish on it, just really because of how much of adoption so far, and then the great user experience, and sort of the developer onboarding experience.
Yeah, it's funny, and like you mentioned the onboarding experience. I think that's the great part, honestly, about about
Hmm.
Arbitrum One in this case, including Nova, frankly. But the main thing is that like the onboarding is like at least when it comes to, let's say, onboarding people from Ethereum, there's like almost nothing different, right? I mean, you're still using the essentially the EVM, as close as you can get to it. So you're almost like copying and pasting whatever smart contracts you have on Ethereum and
Exactly.
putting it onto Arbitrum, and you instantly get you know much cheaper, much faster transactions.
Yeah, that's exactly what we really like. It's the experience that are mimicking the whole Ethereum development process, and then there's not really any additional work that we needed to do. And then the documentations are perfect. Like you can check out how to connect the RPCs, where are some of the test nets, so on and so forth. So it's just really, I think it's really good experience.
Awesome. And is there any specific market on Arbitrum One you're looking to tapping into?
Um, I think what I'm interested is sort of a generalized lending protocol. So the idea here is that on the back end, on the bottom, we wanted to build a sort of a more generalized lending protocol, and then to solve the basic money market demands, especially for long tail assets, right? Um, I think specifically for Uniswap V3 and then profile pics NFTs, and then perhaps some other financial derivatives are the markets that we want to tackle. And then on top of it, we're thinking to build a couple applications. Could be leverage trading, could be buy now pay later. Although buy now pay later is actually ready, people can play around on our testnet. In the long term, it I think it really depends. We're kind of doing a lot more research on it, and then I think just facilitate better DeFi experience in general. That's the direction we're being looking at.
Oh yeah, and I'm sure since you guys are deploying like you definitely know there is no shortage of great DeFi protocols on Arbitrum. So I'm sure you guys will just be another addition to
I
that
know.
list.
Yeah. So
Building,
yeah, yeah,
go
yeah.
for it, go for
There-
it.
yeah, there's a pretty vibrant DeFi ecosystem right now. I really like the innovation here.
Are there any ecosystem collabs we can maybe look forward to?
Mm, ecosystem collapse. I think maybe with maybe like I think other what I'm thinking in the short term, perhaps like more of Oracle system to work with, um, and then like especially for NFTs, we start with the floor oracles, but in the future we have some ideas of how to price it even better with the help of some other pricing provider, and I think those are great like sort of ecosystem partner to work with. Um, and then like more projects obviously to get them on board, those are really important for us.
No, of course, and it's funny. I think I remember the last space that we did, but I feel like some of these collabs that like projects do when they first onboard Arbitrum, they're almost like it's almost like growth hacking. Like you're plugging this to another project's community and kind of absorbing it as your own. But all it's a mutually beneficial, right? Because you have a working product and so does the other team. So it's a great way to collab. That's for sure.
Yeah, I can totally see that. um, have you guys been looking into any new and interesting DeFi or NFT projects recently?
Oh man, there are so many that I can list. I feel like there are. I definitely don't want to get in the habit of listing DeFi projects only because if I don't mention one, people get mad at me. But actually, I guess one I could mention actually more recently that was actually had a pretty interesting thing happen to it was Y2K that launched more recently actually,
Hmm.
and during this kind of crazy period we had kind of happened. I think it was today or either today or yesterday. I think it was today because as you know everything went nuts. Um, you know, they're like stable vaults there, and like what
Hmm.
and like essentially a hedge for like if a stablecoins depeg. One of them did, and users in that vault got like a ton. You pretty much got a huge reward for it essentially, which is kind of the point of the vault. But so
Hmm.
stuff like that, integrating with again products like Paraspace and frankly like any type of integration that makes sense at the end of the day is really what makes I think DeFi so cool because you can just keep on innovating, right? It's great.
Yeah, and then you can really just build on top, and people have this atomic interoperability, and then a lot of really interesting application you can build on top. And then
No,
in
totally.
light of the recent events, right, FTX, sort of the issue that happens, and it seems like people have the rumor that they are insolvent, and then they move users fund, and that's not even possible to happen in DeFi, right? Everything is transparent, it's on chain, it's auditable, and you can trust the code. That obviously the money is in the smart contract, right? Um, so I think this is actually like a really um, like big lessons for the people to like to understand that um, a centralized party without transparency on their balance sheets, um, at some point it will lead to disastrous events or behaviors that people cannot control from outside perspective. And so I think the industry is actually moving toward this more um, accountable and transparent financial ecosystem where it can be the backbone of the future financial system. We perhaps can have consumer on ramp applications that are more centralized. I think that's okay, but then I think that the backend got to be on chain in order to protect users' funds, and then make sure that it works just as how the company is marketed.
Right. And you know what? Listen, if you're going to be centralized, at least just tell us. Just let us know. Don't hide it from
Yeah,
us.
yeah, exactly. Yeah,
uh,
yeah.
yeah. Figure that. I think in that case, maybe we can kind of, if I may, maybe get your thoughts a little bit on on a couple of higher level topics here. Um, what is your kind of thought process on, or at least I guess your opinion on the multi-chain feature and how Paraspace is, or Paraspace and Parallel Finance actually are looking
Mhm.
to approach that?
I think we're gonna probably see more and more tractions on the Ethereum ecosystem. Let's say 70% of the user activities, capital, or even larger amount than that. Other layer one ecosystem is not going to go away, but I think that the importance will gradually go down. Mainly because I think the fact that people are trying to find a place where we have larger sort of um, I would say like credible neutrality, and then the capability of censorship resistance. I think a lot of other, I think a lot of the recent events, especially the blowups, proves one more time that some of the ETH related chains are more durable. So then the question will be, okay, what are the 20% market share going to go? I think it's going to be more um, it's going to be more dependent on the sort of the how the market evolved, and then there will be a lot of newly formed economic zones that have maybe a perhaps a little bit different special demands. Um, for example, in some countries, maybe they prefer to be more centralized and have more control. Then fine, there may be a chain that really specialized for that specific area. And then I think for a global settlement layer, probably the winner will be one, or maybe two, but I think one is more likely. And then if we talk about the multi-chain on Ethereum, I think it's very interesting. So there are people talking about sort of the app chain future. So every single app have a chain itself. I think it's very likely to see, first of all, like a couple of the large apps that doesn't really need atomic um, interoperability that will create their own chain. It could be a GameFi chain, or could be a trading chain. Um, and then we can see a lot of generalized EVM layer twos, layer threes, and people can build on top. And then if you want to do some atomic, also do some interoperability, then you have to wait until some cross-chain bridge transfer or things like that. Um, and then we can probably just go from here.
Totally, yeah. I mean, it's funny because I mean I think we touched on this topic actually a lot in our spaces, but it's definitely true. Like we say it all the time. Like there definitely is not, there is no one chain that can fit everyone's needs at the end of the day.
Hmm.
And again, it's the reason why I mean, obviously at Option Labs have two chains. Technically, shout out to two chains,
Mm,
Arbitrum one and Arbitrum, right?
yeah.
But yeah, yeah. But just, different chains fulfill different needs. But I definitely agree with you there.
Yeah, yeah, I can definitely think so. I can also see a lot of the great developers in this space will launch multiple chains. If you look at Polygon, they have so many solutions, right? For perhaps each of the industry demands for use cases. That's probably also what we're gonna see. It's just that like one or two really generalized settlement layer as a huge winner. All of the assets are recorded on that, and then you have plenty of different use cases like smaller use case based chains or application based chains or even smaller like smart contract platform that people build on top. um, but then it's not going to be too much. I think that a lot of the times people still prefer to build something relatively easier, for example a smart contract app versus building the whole chain. I think there's only a portion of the team has the economic incentive and has the enough developer resources to launch a chain. Most of the people I think still going to choose to launch an app, right? If you think about the Web2 example here, right? Most of the people choose to build an app, right, on AWS or GCP. And there are some companies obviously build their own database, right? Build their own data center or maybe their servers, like physical servers. But those are just the biggest companies in the world, right? So I kind of see that's where we are going. The largest application, once they control sort of the user flows, brands, and then they can obviously develop a chain themselves. Most of the application will just stick around with a current, uh, let's say layer two solutions.
Oh yeah, no, I definitely hear you there. And I guess just to kind of continue off that thought, uh, how do you see maybe like I guess lending change, for on-chain assets, of course, within the next. I mean, I want to say 5 to 10 years, but I mean,
Hmm.
frankly, I'm sure we'll see a major change even in a year or two, with how fast the space moves.
Yeah, yeah, yeah.
Yeah, I mean, the main question there is like, how do you see lending kind of changing
Mm.
within the next couple of years?
So
Uh,
yeah, I think
Assets especially.
yeah, that's actually the lending is where Paris is really trying to be the best at. I think Compound as the first generation money markets have done a very impressive and incredible work. Um, and then I think the problem here is that it's it is limited to very smaller set of assets. It's not scalable. And then I think in the very long term, let's say 10, 20 years, perhaps every single asset will be on chain, will have a digital twin or digital version of the ownership on chain, right? So it's not going to be able to support all of them. What I see the future feels like we're heading toward is a more a more risk controlled version of a lending protocol. Um, Essentially people want to borrow with borrow anything against everything, right? So that's kind of the idea here is how can we support as many different type of assets as possible, but at the same time we provide the capability for lenders especially to select the risk, right, that they want to underwrite, right, the type of asset they want to underwrite, the risk they want to underwrite, but at the same time in a very efficient way. We do not want to go back to the peer-to-peer model. It's not that efficient. We still like the pool model, so we kind of have to find somewhere in between. If we can solve this problem, I think we're going to see a huge improvement on the existing lending, DeFi lending space. And then every single asset can be built on top. Even the lending protocol itself can be its own sort of app chain in the future, right? You have a bunch of an asset in the on let's say Ethereum layer one or layer two, and then on top of it, if people want to have more advanced lending, right? If you want to select only three assets I want to underwrite, you have to search through all the available liquidity pools. If you use let's say three different assets as a collateral, then it's very computationally heavy to do that on a base layer. Then you have to go up one more layer or two more layers to do that computation. Um, I think the liquidation portion specifically need to be improved as well. A lot of people notice that there is only one liquidation line. I think in the future it can be a little more dynamic, and then that help user better control their health without too much manual intervention. But at the same time, design a more flexible auction system that can support wider range of asset. Right. So for liquid asset, it's perfect to use the fixed discount model. You give 5% discount on ETH, then somebody will buy. But for not liquid asset, for example, NFTs, 5% might not be enough. So you kind of have to use an auction mechanism for the price discovery. But can we find a more universal mechanism for any kind of assets to do? I think that would be another area to improve on.
And do you think that we're like close in any way to like this?
Hmm.
Um, I guess you would say like perfect lending platform, or do you think
Hmm.
there's just I don't know. I guess I'm not. Yeah, I've used a lending platform before, but yeah, I guess it's hard to know like what specifically needs to be improved upon for everything to kind of come full circle. Okay, like this is more or less like the optimal version of a lending platform that we'll want to have essentially.
I think it's getting pretty close. In fact, that we're working toward this direction. RV2 is a completely, you can think about the RV2 is similar to Uniswap V3, but for lending protocol. We have a lot of design involved, and then we support a lot wider range of assets, but super efficient. It should be here pretty soon. In my opinion, I think it just one, we requires some levels of like I think some levels of innovation on the lending model itself, or even like complete redesign of the existing lending model. Also, I think it's also very important to work with the existing money markets, so we can share the liquidity pools between each other, how to source liquidity from maybe some of the existing protocols, and those are also a very important factor to work on. But in my opinion, I think it should be happening pretty soon. And now you guys can see many lending like siloed lending markets, right? Or money markets. Some of the money markets specifically designed for derivative tokens. I also see a bunch of lending protocols specifically designed for NFTs, and then there are also some lending protocol just designed for one chain, right, or one type of asset. I think that's fine. It's just the beginning of the lending markets. In the future, all of them should be uh, interconnected, right? Your you are able to underwrite multiple pools at the same time. That's important. But also at the same time, if you have multiple levels of collaterals, you can also use them in a cross model instead of an isolated model, right? Nowadays, if you have, let's say, three type of asset, super liquid asset, you have to go to one app. Non-liquid asset, you go to another app, and then for derivative token, you go to the third app, right? So it's cumbersome to rebalance across those three apps, and then it's complicated to manage around it. So the better model, obviously, is that you can enjoy the cross mode experience, right? Everything connected with one health factor, but at the same time, you are not paying worse interest rate, right? You're paying um, based on the pro rata shares of your collateral, and then you're only paying certain interest rate for one type of asset. The other type of asset you're paying different interest rate, and then you just pay the sort of the weighted average interest rate. I think that would be a better model. So again, like the thing here is that if we just put all of the asset into one simple money market, it won't work. As I said, like one, we're charging the worst interest rate. Second of all, the risk is just too high for lenders. You're just assuming that lenders are okay underwriting everything, but that's not the case for all of the lenders. Um, and then so the thing here is this requires a pretty big innovation on the base lending layer, and then I think post launch, people can see some big difference on that.
I think on that note, maybe be nice to hear a little bit about your roadmap. We can dive into the day one stuff afterwards, but maybe just give us an idea, like you were saying, what you guys have in your upcoming roadmap, a couple months down the line.
Yeah. So the upcoming roadmap is to first launch Paraspace on EVM environments, right? Arbitrum, Ethereum as well. And then, so this is our V1 product. It would support three type of asset into one pool, and with some risk control measurements. That includes NFTs, ERC20, and derivative tokens. Entirely three type of asset we can allow you to borrow against all of them, or you can borrow them as well. And then we have a lot of the programs, and they're gonna run, ambassador programs, things like that, and then community advisor. And then we want to invite a core group of users to join, and then we are sort of launching a loyalty program. So if you do some works or contribute to liquidity, sign up, things like that, then the loyalty program will provide points systems. And then I think for us, we're planning for a V2 launch alongside with our governance token. And then the governance tokens will allocate some portions for a retroactive airdrop based on the previous point system, essentially, on the levels you have. And then the V2 launch specifically solve the problems that what I just mentioned before, which is we perhaps for the first time can allow lenders to select the range of risk you wanted to take. The highest risk that you want to take, the lowest risk that you want to take, and then you earn very different interest rate, right? It's highly customizable, and then we will be able to support um, 256 tiers, and then each tiers we can have, let's say, 256 type of assets. So it's going to be a lot of combinations of assets that can be supported. At the same time, again, like borrowers can also borrow with the cheapest interest rate as possible from each of the tiers and source liquidity from the pools that are available for them. But at the same time, maintain one health factor versus multiple, which will represent the same borrow experience as people have on Aave and Compound. And then I think that would be like another after V1 would probably take another 3-6 months to completely launch V2. And then in between V1 and V2, we want to build a lot of partnerships with other lending protocol as well. Like we have some ideas on how to share liquidity between us and then other lending protocol. So people can actually both earn yield on Compound Aave, Euler or Euler Finance or whatever lending protocol, but at the same time also provide liquidity for us. So you kind of double lend right at the same time. We can do that as well. So we're going to build a lot of partnerships, also with collections and then big holders, other chains, and then after V2, eventually we wanted to have like V3. We wanted to have the lenders to essentially underwrite like to the most granular levels, like they can define the risk to the most granular level, to the asset or even the model level. Then we might be able to support way wider range of models. What I call model is more like an underwriting model that includes how you price the assets, how you liquidate the asset, how you provide LTVs. Is it going to be a fixed term loans or is it going to be a floating loan, like perpetual loan? And then so the lender can select a wider range of models that they wanted to provide. It sounds pretty complex, but obviously we're going to build something on top of it to make it simplify. Most of the users are not going to um, customize the risks, but only for professional lenders, especially for like large institutions for changes, they can go ahead and define the way that they want it, and then to earn a different type of return profile. That will be the V3. And then beyond that, I don't know. Super early to tell. Uh, yeah.
By the way, I love how you have like V1, V2, and V3 planned out already. That's great.
Yeah, we do.
Uh,
And then for each of the version, we already have like specs and then all the kind of the idea specific on how that works, and then kind of prep for it and work on that.
Great. Then yeah, no. In that case, then obviously, as you just mentioned, one of the first things in your roadmap is that you're coming, of course, to our. What can people expect day one, just generally?
Yeah, so for day one, people can expect two products. One is a lending protocol. The other one will be a buy now pay later. So there are 4 things that it can do. First of all, people can borrow assets against 3 type of collateral. The first type of collateral will be the NFTs. Second type will be the derivative tokens. Third will be the typical ERC20 token. And then people can also borrow any of them. People can also borrow NFT if they want. People can also borrow, derivative tokens. Although borrow derivative token will be delayed a little bit, and then borrow ERC20 that's by default supported. Um, and then that's like one sort of functions that they have. And then let's talk about the buy now pay later and NFT side. For the buy now pay later, um, again, like as I said, people can buy multiple NFTs from OpenSea, LooksRare, X2, or whatever platform Blur, with 0 down payments essentially, because they have the current and future credits on the platform. At the same time, they can also do a collateral swap, or we can call it collateral listing. So while you are using a platform to borrow, right, for your NFT, you can also at the same time let other people to give you an offer, right? It's kind of like an instant loan first, but at the same time you can wait until someone else give you a better offer so that you can sell it. So that's kind of a V1 functionality as well.
Awesome. Yeah, I think then on that note, we can actually throw it to the community if they have if any questions. So those of you who are in the chat, if you want to maybe raise your hand and you want to ask Yubo any question about Paris or anything else, raise your hand and we'll bring you up. And if not, of course, we can always end a little early. But let's see what they got. All right, we're bringing up Telix Goldens. Uh, Let us know what you got.
To begin with, we support top 10 NFTs. Basically from all the okay. So on Ethereum, it will be basically for example, like Bored Apes, CryptoPunks, Muted Ape, Doodle, Moonbirds, maybe it's Azuki, Other D's, Clone X, and things like that. I think around 10-ish. On Arbitrum, I can come up with a list as well. We are also supporting the top, like super, the largest, most liquid assets. And then different chain have different combinations.
All right, thank you. I'll be expecting the list on Arbitrum, please.
Yes. Thank you.
Thanks for coming up. I think we had someone else just request this. There we go. Always someone at the nick of time. Bringing on Sheik Rayan. Hopefully I said that correctly. You got the floor, Sheik. Sheik, got a question for us? You're able to speak. Just make sure you unmute yourself in the bottom left. I'm not sure if you realize if you're muted or not. There you go.
Can you guys hear me?
What was that?
Okay, my question now is like, I see you guys have a partnership with Lens Finance. So is it kind of every Arbitrum or Ethereum is going to be like switch to the layer finance? It's going to be like everyone has a chance to use the
I feel like I may have heard what you said, but you mind repeating it real quick? Just a little more clear. You give a lot of background noise.
Okay, my question is about parallel finance. Like, how is it like integrate to Arbitrum or layer two blockchain? And how is it safe for everyone to use?
Let me make sure I'm hearing correct. So you're saying that how are we integrating with Arbitrum for the NFTs?
Yeah, yes, and how is it safe for everyone to use?
So on Arbitrum there are a lot of the native NFTs out there. There's the GMX Blueberry Club from Small Brains and many others, right? Butterfly, I heard about it, and then there's the some native Arbitrum NFT exchanges. So the native asset will support them, but if I think there maybe I'll ask the host as well. Like, do we have the bridge ready for the NFT assets? Can people bridge Ethereum NFT to Arbitrum right now? If yes, then we'll definitely support all of them as well. And so that's kind of the idea here. Like any other chance we wanted to bridge them on top. Yeah. And then one more NFT will be the Uniswap V3. That's what we call financial NFTs. There are a lot of people asking us to use that as a collateral to borrow for advancing their liquidity, yield, and some people even want to construct for option payoff, sort of customized option payoff functions. So we will support that as well.
Oh, that sounds great. So, is it?
Thanks. Thanks for the question, Sheik.
Yeah.
So we have someone. I think it's C. George. George, you got the floor.
Thank you. So I'm just curious, how are you guys planning on determining, let's say, for example, a board yacht, NFT, how are you guys planning on determining, we'll say liquidation, liquidation price on those various NFTs?
Yeah, so we actually use a loan to value model. It's roughly around 30%, and then we have a liquidation threshold that is around maybe 70%. There's a space, and then those parameters are determined mainly by a quantitative research. So we did the value at risk research, and then we did the conditional value at risk, and then we calculate what is the average loss given the tailwind events that we need to that average loss when we need to fire sell a specific board apes or multiple board apes at the same time. How much floor discount we have to give. So with those numbers, we determine the initial models. Um, and then going forward, we have a new version that give a little bit dynamic LTVs and liquidation thresholds. And then it is a little bit dependent on the rarity. So for most of the NFTs, it will be exactly the same. But for the top 5% most rare NFT, there will be some sort of linear relationships. So we'll give a little higher LTVs for those super rare NFTs out there, so that they can borrow a little more money. And then again, like we're using also an auction model when the Dutch auction. So when actually the user trigger the liquidation, we'll run a Dutch auction. So there will be some levels of price discovery. It won't be just sell below the floor, but it will start from, let's say, a lot higher than the floor, and then all the way down to lower than the floor. So hope that answered your question.
Perfect. Thank you.
Yeah, you're welcome.
Thank you, George. All right. And I think we have another one or two people here. Damn, we got Sky Coach. Sky Coach, what do you got for us? Sky Coach, you there? Or bottom left to unmute yourself, by the way. I'm realizing some people don't know that yet. All right, just in case, Sky, if you want to speak again, just raise your hand. We'll bring on go Pulse over here. And we may end it after Pulse, just in case. I think I don't see any more hands up. I think Pulse is like eternally loading. Oh, there you go. Pulse, you there? There you go. You're good. We can hear you. How's it going? What do you got for us? What kind of question you got for Parallel? Pulse, you there? No? You get cut off there. What was that again?
Hey, somebody help me find space.
I think you're talking, but it's being cut off though.
Oh, so
Sorry, Pulse. If you want, maybe try coming back up. I think we might have to check that internet connection because you're not really coming through here. Just in case, we'll bring up a whole last person in case Pulse doesn't raise his hand again. Juan, how's it going?
Hello, friends. Can you hear me?
Loud and clear.
Right, that's right. Okay. For Hunter, don't worry, because I'm not dealing like his mode today. So, my question is: we're seeing a market crash today, and we saw a lot of this caused by a lack of responsibility for some DeFi protocols, centralized protocols, like happening today. And these facts make regulation hurry to be up, and even harder to protocol to adapt at. And at this moment, parallel think about regulations problems or regulations moves to anticipate and probably a regulation, or aren't worried about it?
That's a great question. I think we worry about it for sure. It's it's really hard to say the like I think the regulation is coming, but there's no clear guideline. So what we are thinking is that proactively making the protocol as decentralized as possible. That's first most important thing for us. And then another thing would be try to work with, because we know that we're a protocol, and then we wanted to work with more um, on-ramped solutions. It could be a neobank, it could be it could be a exchange, or it could be any apps that really provide great user experience on top. We also want to work with them as well. I think that they have a lot of experience handling the regulation side, how to provide user onboarding experience. Potentially, some of them provides insurance, and then custody and things like that. And then for the advanced users, right, you can obviously always use our website and play around with that. And then I think another interesting thought is that recently we've been seeing this proposal by Sam that we should regulate the whole front end of all the DeFi's. Um, I think it's just really hard, really early to say that this is 100% the way to do, and I'm not pretty sure that's the best way to do. Um, yeah, so we're still exploring on this front. It's a really good question.
Okay. Thanks. Good for your time. Thanks for your time, and thanks for this space for us of my
Thank
question.
you. Yeah, thank you. Appreciate this.
Thank you, Juan. All right. And Yubo, just in the interest of time here, for those who are interested in joining the parallel community, how can they go ahead and do so? Or even if they want to contribute, what's the best way for them to do that?
I think maybe you can follow our Twitter, follow our Perispace Twitter as well. We have a Discord channel, and then since we're launching, we're actually going to launch a testnet campaign in the next I think weeks or so. So yeah, so definitely if you're interested, check it out the website, check it out the apps, and then you can also DM me any questions or DM our team any questions. We're happy to answer.
Awesome. Again, Yubo, I really appreciate you getting on today. Look forward to your launch coming soon. And yeah, we'll see you guys in the next one.
Thank you. Bye.